Hello guys. Sorry for last week. I was unable to make the live, but today I'm ready to begin with the live. So, what is the subject of today? As each week, we try to see a subject and I try to explain as much as I can, and then I will answer your questions after that. So, cycles of stock market. You know, a lot of people they talk about that the stock market has cycles. So we try to understand what is this or what are these cycles and why it happened. Okay. So in order to understand this, people, because they read a lot, they get influenced about what they read. Now, these cycles of the market, it means that for many years the stock market is doing good, and then the stock market in 1 year or 2 or 3 it will do bad. So they have this idea. This idea, you can see it in the chart, but most of the time, a lot of people they read about it, and you know the stock market. It's a long time ago. Okay, it's like 100 year, 150, and it's after 10 years, 12 years, and then we see a bad year. When we have a sell-off and we see a bear market. Okay? Hello, Alejandro Colmenares. Thank you very much, Colmenares, for coming. And as I told you, I'm just waiting for some people to come, and then I will show you the chart and I will explain into details about the chart. So for me, understand that I don't follow any opinion of the market analysts or books or what they say, or okay, because people, when they read a lot, they watch too much TV, so they get influenced. And because these people are very famous and they are rich, they have money, they are respected people, so people they follow them blindly. Okay? So I'll give you just an example. Each year, some people in January, they begin to say that this year is a bad year. This is the year of the crash. This is a bear market. So they say it every year. You go to these guys, you find they speak about crash every year. Now they know after 8 years, 10 years, 12 years, there should be a year where it is red. It means it is a bear market. So it happens. So they just do what we call, it's not only speculation, it's what we call prediction. Any stupid person can say this year will be bad. But what is the thing? What are the things? How do you know that this year will be bad or good or bull market or bear market? How do you know? Since it is in the future. For example, take this example of this year. Before the coronavirus downtrend, for me, here how I know that there is something wrong in the market. I have in my life as a trader, okay, I have only done 2 speculations, not predictions, because I don't predict. I don't predict the market. Okay? So the first one happened in 2018. In 2018, in the beginning of 2018, what did happen? For me, I have never thought that there will be something bad in all the years that I have traded. I have begun trading in 2010. And I am making videos since 2011 in my channel about stock market, about things. But I have never made a video and I said that this year is looking bad. Okay? The only year that I said is 2018. Now, in 2018, and it was really a bad year. So why did I say it is a bad year? Is it prediction or is it speculation? Now, in 2018, I saw a lot of analysts speaking about a bull year. They say 2018 will be excellent. And they ask people to buy. This, you know, when I talk about big analysts, it means those people, I don't want to give names, but those people who are Wall Street guys and people that watch them too much in CNN, Bloomberg, CNBC, all the big channels that they speak about the economy, about the stock market, and this what makes me think why they are saying that 2018 will be excellent. I understood that there is a problem in the stock market. There will be a problem in the stock market. That is the first year I speak about a bear market in that year. Now, is this a prediction? No, it is not a prediction. It is from my experience. Because when I see something not natural, I doubt in it. And they say, why the people are why these analysts, these TV guys are asking people to buy? Why? And I will show you right now in 2018 what did happen. Now, guys, since I always give you a proof, hey, free trader, guys, I am always giving you proof. What I said, what I did, I will show you. You can go to my channel in 2018 in January. You will find I am speaking about a bad thing that will happen, and I have explained it. Okay? Explained it before it happens. I explained in Saturday. I think in Saturday I make a live because it was a live. It was a live, and if I find it right now, I find it in my YouTube channel. I will show it to you. But let me now go to the chart. Bear with me, guys, and I will show you what did happen as a cycle. So just give me 1 minute. Okay. So let's go and check. Okay. Look here at the Dow Jones. Let's go to Dow Jones. Okay. Now, let's go to use monthly. We try to see if it is good. 2018. Yes. Now, look here. So, this is what I am speaking about. Do you see this candlestick? Okay. Now, you might say, why the people are speaking here too much in January? Because it's the beginning of the year. Always in the beginning of the year, the analysts, they have something to say, very, very important, because it's the beginning of the year. Now, for me, this is what my inquiry. Why they have been speaking about good year and it was a bad year? Okay, so this is the first month of January. Let's see where is the yes. Look here at the bad thing. This is the bad. Now let's see here, because this is January 2019. This is okay. Now look here. You look that the year was bad. It goes down, it goes down, it goes up, but it goes down, goes up, but it ends bad. So here, for example, the year was 200. It means in 29 December, in Friday, 29 December, Dow Jones was $247.38. So 247, okay? So here is 233. So it was a bad year. And this year is what we call a bear market. Okay? A bear market, because if you if you own stocks here at the end of 17, you own stocks and you are investing, by the end of the year, by 29 December, you will be losing money. Okay? You will be losing money in this year if you are an investor. That's why it is called a bear market. Okay? Now, here in February. Now, in January, at the end of January, I make a live and I said there will be a crash. Now you ask me, how did you know? I know because I see something wrong in the market, because they were speaking too much about buying, buy. Now, in order to understand this, I will let it to later. I will explain to you why these analysts, they trick the people to buy too much. Because in general, hedge funds were selling heavily. So you buy too much, all the people buy, and the other people are selling. Now, with the hedge fund, let's say hedge funds and mutual funds, they have sold a lot of millions and millions of shares. The stock market will go down because there is no one who is buying. People are selling. Okay? People are selling. The big guys are selling. So other people are selling short in February. Okay? I will now find the video and I will show it to you just for confirmation that when it is just before, I think it's Saturday, on Tuesday, for example, Saturday, 31st of January 2018, the market was so strong, but next week it began to go down. And this is the live, and the guys who were with me, they were listening to me, they understood that my speculation was right. Okay? So let's speak about this, and then speak about this. 2019. Now, here in December 2018, when the market goes down too much, what the analysts have been saying? They have been saying that next year will be a bad year. It means 2019 will be a bad year in December. It means they want people to sell all their shares. And then when they sell their shares, here hedge funds in January, They begin to buy. Now here, for me, I told guys that from 26 December, after 26 December, I see a reverse of the trend, and I ask the guys to buy. And this is second proof that my speculation was right. Okay? My speculation was right. Now, here is what happened before in 1 month. What happened in February and March? The stock market go down. So for me, I sold and I sell short here and here, and then we begin to buy here. So this is where we are now. So I begin to buy from the beginning of April. I begin to buy here, and the stock market has gone up. And this is why we make 127% this year, because we bought in our trading account here in April. You see that? Now let's go back. Okay, let's go back. So I just try to explain all this. So I will try to see if I can find the videos, and I will show you the video. Just a minute. If I can find the video, it means my own videos. I hope I can find this. I hope I find the video. I think I find one. I think it is the same, or no? Okay, guys, bear with me. I find the video. Okay, at least people who are following me, when I say something I have never said before, it means from 2011 to 2018, I have never said that the market will collapse. Never said. But only in January 2018. So I will show you right now the video, and just please guys, listen to me and see. Okay? Okay, this is my video, as you can see. Okay? Now what do you see here? Streamed on 27 January 2018. It's live stream number 40. You can find it, Solution to Stock Market. See, what did I say at the beginning? I don't know if I said something. Just a minute. In this video, or in this session, we try to speak about the stock market crash. Okay? All the people speak about it. It's not from today or from this year, 2018, but 2017, 16, 15, or any other year. Okay? The reason why the people or investors are always asking about hello Mohammed bin Abba, how are you? It's very good. So as I told you, the subject of today is so important to everyone. Okay? Especially investors, those people who get the most hit. And I will show you during this presentation some problems of these crashes and when they come, what do they do, and who will be the biggest losers, and who benefit from this crash? Because people, a lot of people, they think that when say stock market crash, they begin to think that it is a disaster for everybody. No, it is not for everybody. It is for the public, mostly the public. Okay, the public, it means us, all the people who invest and hold for a long time, and they don't know what to do in these cases. Okay, and this is the most problematic thing in the stock market crash. Okay, so I'm just trying to just give you an idea, and then when we have a lot of guys, I will be happy to explain to you more and more about this stock market crash and solutions. Okay, some solutions are very hard to do. Okay, and sometimes is in the past, we are in the future, because we are just. It means a lot of people. A lot of people are involved as a small correction. Then it goes up again, and then the crash. It can take long. It means it's not what. So guys, I can't give you the whole. It means the whole video, because it was 2 hours and 28. So I have explained why I said there will be a crash in the market, but I have explained a lot, and it takes 2 hours and 28 to explain this, because the people were asking, and this is one thing that you should know. But for this video, in order that for me to get all the answers from the video, I should watch it again and give you the answer. Now, the second thing I want to talk is for the coronavirus. Okay, coronavirus for this year. Now, the thing is, I sold almost all my shares in 21st of February. Now, in speculation that the market is not doing well, I just get a feeling that the market is not doing well and it might collapse. So I told my guys who are in the subscription, if you go to the week when I publish the video in the 21st of February 2020, I sold on the Friday. I sold almost all my shares, and I told the guys that I feel that there is a problem. Now I will show it to you where this happened, and I will give you the reason. Okay, just bear with me, guys. Okay, now let's put the daily. Okay, now do you see this is 21st of February on Friday? It is here before the collapse. Now you tell me, Karima, how do you know, since you are speaking always, you don't believe in predictions? How do you predict? And what is the means that you predict that there is a downtrend here? From 21st, there is a gap down. So when I sold here, on Monday there is a gap down. And after the gap down, things begin to go down. So we sell short here. And you can go, if you go to my subscription, you find that this week's we sell short. But the beginning from here, we begin to buy. And if you go to my subscription, you will find here that I told my subscribers to buy stocks. That's why we have a very good money this year. Okay, although the high of this year, 295, we didn't reach it right now. With all this good, so the what we call the investors from last year did not make any money because they lose all this and the stock market is going up. So, for example, the high here, 295, now it's 286. So we have $9 to just make their money. So they have not make any money this year for investors. But for traders like us, we have made. For example, let me take this and just put it in the thing, just to understand this. I'll just try to explain. Okay, to explain this very very quickly. Now, let's go to the paint. Okay, look here. Now, just to make sure you understand what I'm saying. Here in this, let's change the color. Here, in this candlestick here, this is 21st February 2020, this year. Now, I sold almost all my stocks. I sold almost all. Sold stocks. Now, in my trading account, the trading account was good. It was working. But in this here we sell short. We sell short, and we use inverse ETFs. Now here we buy long. All this you will find in my subscriptions by date. It means when I put videos on my subscription, I give the date. Trading account. It means I'm speaking about my trading account. Okay? So, here I sold. Here I sell short. Here I buy long. This is how I trade. Now, you ask me, why do you sell on 21st February 2020? This is the secret of a trader. So, secret of a trader. Now, for me, I have a technique to use to see the strength of the trend. Now, this technique I would not give it to you for free, but I have this technique always. I use it when I want to exit stocks. So this is a technique to exit a stock after a long trend. Okay? Now, this is verified. If you go, for example, on the 21st of February 2020 in my trading account, you will see that I sold almost all. Let's say we have 15. I think I sold 13 stocks. I left only 2, I guess, because they were strong. But I sold 15 with a reason. Okay? And I left 2. And then on Monday, there is a gap down. I sold these 2 also. I sold them. And my account has no stock in it. Okay? And I make a video showing, because when I make a video, I put the date. I showed to the guys that, guys, I have sold all my checks on Monday. So here, 21st, 22nd, 23rd, 24th. 24th of February, okay, I make a video saying I have no stocks, and I showed my trading account there is no stock, because I sold the 2 that are left. Now here, selling short, you can check what are the stocks that we sell short, what are the inverse ETFs that we use. Now here, buy long, you will see which days we begin to buy stocks. You will find them. Okay? That's why we make 127% this year. Okay? Which is excellent in our profits. Okay? Now, hello everybody, NASA. Okay? So, these are something that you should understand, that sometimes you have to be careful. At least if you are investing for the long run, it means this is an opportunity for 2 guys. If you are an investor and you see that the whole market is troubled, for me, if I am an investor, I would sell everything I have, except when I can. But if it is a 401k, you can't just sell everything, because they don't let you. They don't let you sell your mutual funds. No, they don't. But I am speaking about your account. If you stay like an investor, so this is, I will show you what will happen to any investor. Okay, I will show you what will happen to any investor. Okay, just bear with me, guys. Okay, look at this. Okay, now the stock market in the high here, it was 295. Let me see the thing exactly. 295, 87, 12 February. Let me see just the exact information. 87. Okay, so this is the high. Now, when is this high? This high is on 12 February. This is on the 12th February 2020. Okay, now let's say you are an investor. Here I'm speaking about investor. Now, I'm not speaking about a trader. If you are an investor and here you did not sell your shares, what did happen? Is you go down, then you go up. So, what does it mean? It means all these and all here, although from the down here, you could make a lot of money. But the problem is that because your money is here, is $295.87. Just I mean all. It means the average of all your stocks is this. So now it is 286.70. So what does it mean? It means you are still down. You see, you are still down. You didn't make any money this year. But if you are a trader, and you begin buying here, you buy here, and here you sell short. This is why trading is excellent. Trading, you are flexible. Investing, you are not flexible. You bear the losses and you wait too much. Okay? So anyone who has an investment from last year, most of the time, it means beginning of this year, 2020, it means at the end of February, you will be losing money. Okay? So this is what I explained. Now, let's go back. So, Free Trader said, that's how Wall Street steals money from investors. Now, listen, when we say Wall Street, it's not only Wall Street, it's day traders. It's us also. But because when you say Wall Street, who has sold short? It's me, it's you. Every trader, when the market is going down, they sell short. So it is us also. Although we say Wall Street because they make too much money and they decide better than us. But understand that any trader who sells short is with Wall Street. So don't say it is just a way to make money. So you can't just blame Wall Street for losing your money. You lose your money because you don't know how to trade, or because you are a long investor, so you know that these cycles happen. That's why we go back when I explain cycles of the stock market. Okay? Now, in order to go very, very quick, because this time I'm not going to go to take long, because I don't think that you will have more questions. Now I will just show you what we mean by cycles of stock market. Cycles of stock markets, it means there are many years that are good and 1 year, 2 years, 3 years that are bad. So let's go and check you, and I will let you know how to see this. Okay? How to see this from the chart. Now, this is Dow Jones. You take the yearly, because the yearly it gives you the years. Now, see this. Okay? Now you see how in January, the open of the year, the open is $286.44. This is the beginning. This is the beginning of the year. Now the market has been going down, and then it's going up now. So most of the time here, 285.10, and now we are 286.7. Yes, it means you are equal. But the whole year, the investors did not make any money. Okay? Now, where are these bear markets? So we have bear markets here in 2000, 2001, 2002. All these 3 years were bad in the market. Now, we have 2005, it is bad, but it's not big. We have the big crisis of 2008, where the real estate crisis. And then we have 6 years that are excellent. Now we have a bad year in 2015, and we have a bad year in 2018. And this year, as you can see, I will just show you how this year, because I will just show you how this will be. Okay, how this will be, just to make sure you understand how this year will be. Okay. So I will go to the chart. I will go to the chart again and explain to the explanation. So let's go back to it. Okay. Now look at here. So I want just to, because when you see the chart, you will not understand what is this candlestick, why it is like this. Now I will tell you something. In order to understand what did happen, this 2019, it ends, for example, at 285. It means the end of the year of 2019. Okay? Now, this, like this, it's the open of 2020. It opens at 200, let's say $86. So it means it's the same, see? It's the same. But what did happen in the market? What did happen in the market is that this is the beginning of the year. It goes up a little bit, and then the coronavirus is going down, and then it comes back up. We are here. And now we are at 286. What does it mean? It means that you see this not full like this. Because when it is full, most of the time when it is full, you should begin here. The open is here. The open. And then you see the candlestick which is green. But here it begins like this. It go down. It go up. And it's not closing yet. Now suppose that this year, in 31st December this year, 2020, suppose that it ends good. So how this will be? You will see a candlestick like this. Okay? You will see like this, and if it goes up a little bit and go down, you will see candlestick like this here. But understand that we don't know. Now, what if the market collapse again? How this will be? Okay? It will be like this. Like this. It goes up a little bit, and then if it goes down, it will be like this. Let's say it goes down too much. Let's say it goes to $250. And then you will see a red candlestick like this. You will see this here. The same as this here or this here. So you will understand? So we have two things right now. Since the market is now, it break even right now. It breaks even. Breaks even, it means it's the same right now. But now, we are just in August. Okay? We are just in August. So we have September, October, November, December. So we have 4 months. 4 months. We don't know what will be happening in the. Is the market will continue to go up, or is it going to be down? So you will never know. Okay? Now, whenever you see the chart, I will show you right now the chart. Okay? How this is. Okay? I will show you how the chart looks like for this year. Okay? So, look at the chart. Okay. Now here, let's say the beginning of the year here, and it is 286. This is the end. the end of 31st December 2019. Okay, this is here. So like this. Now we are here. So it is a break even. Break even. Now either the market goes like this, continue to go up, or it might collapse. Okay? Either it collapse or it go up. We have 4 months till 31st of December 2020. Okay? So we will never know. So if you are an investor, now is the thing. If you are an investor, if the stock market goes 4 months till 31st December 2020, it means you will be making little money or some money for this year. But if the market collapse and go down again, you will be losing money as an investor, because here I'm speaking about investors. Now traders are not the same. Traders, well, they bought here like us. We are making 170% this year, while investors, they are making 0% this year. You see that? Now this, you must understand how investors sometimes in bad years, they lose money or they break even. But as a trader, if you are trading good, you can make money every year. If the year is bad, you make money. If the good year is, you can make money. That's what we call cycles of the market. And understand that you don't have to predict or make a speculation, because you can the market is good and then you decide to sell all your stocks. If you are an investor, you should see some signs. You should see that the market is really going down. You can sell your shares and buy them again. For example, you have been 5 years investing in some stocks. They are doing good. But in this coronavirus downtrend, you have been losing money if you continue to keep your stocks. Okay? So, in terms of investing, you should be aware of these cycles. Because I understand, most of the time, I don't understand why the people are so scared to sell. Okay? The market, you can always make money from the market. For investing, it's not in 1 day or 2 days or 3 days that you make the money. Okay? So I give you a solution to investing. Okay? So let's give you solution right now, because I always, when I give you the problem, I give you solutions. Okay, so let's go to the explanation, and I give you solution for that. Okay, so now let's say you are investing here many years. Let's say you have 5 years you are investing. Okay, you see that the market is collapsing. Now let's say you decide to sell here. Okay, you sell here. Now what you should do, you should put a line like this, and you leave. For example, you see if the stocks are continue to go down, you leave them going down, going down, going down. Now, when you see that they are going up, but this you should be a trader to know, because it's very hard. But for you, don't be astonished. Whenever the stocks go above what you sell, this is the sell point that you sell your stocks. The sell point. Now, everything, when it goes up, you buy your stocks again here. And if the market is going up, you will make money better than to stay here and then you come up alongside. Okay? Because you will never know that the stock market will come back again. Now this is only 2 months. What if the stock market has lost, like 2008? How much the market has lost? It has lost 50%. Are you going to stay until you lose 50% of your money? For example, you have $100,000 in investment in stocks for many years, let's say for 15 years or 20 years or 30 years. Are you going to wait until you lose 50% of your money? Okay? But if you lost, for example, let's say 10% or 20%, you are not going to lose 50%. Okay? You lose 20%. You lose 20% only. And then when the market comes here and here, you make this 20% or 30% and you are okay. Your money comes back very good because you are investor. But if you stay, like what did happen here, I'm telling you what did happen in because a lot of people they don't know what will happen in 1929, the big crisis. In 1929, the stock market, the Dow Jones, was $340 a share. It goes to 40. So how much you have lost? Okay? Two times. Let's say 40, 45. So, most of the people, if you have 340, now your stock, let's say your stock here, just we give one stock, it is 340. Now it is $40. What does it mean to your account? You go for a bankruptcy. All your money, you go for bankruptcy. You are bankrupt. That's why in 1929, almost all investors, they lost their money because the whole stocks are going down. Now, who has made money from 1929 for many years? Only traders who have made a lot of money and too much money. All the investors have lost all their savings, all their investments. That's why I told you that do not expect that the market will contact you and say, I am going down. When it's going down, you will never know what will happen because it is your money. Okay? It is your money. Okay? It is your money. So 368. Yes. Okay. It means it is your money. If you don't take care of your money, no one will. For example, let's say, I give you an example. Let's say in 2000, just an example, okay? Just an example. In 2021, let's say there is a big bear market. Okay? Let's say 340 is the Dow Jones ETF. Okay? It's 340. What if it goes to $40? What will happen to your investment? You will be bankrupt. I have told you many times. So people who tells you, oh, you should just stay and the market will redress, but it can redress in 10 years, 5 years. Maybe someone will die and the market has not go up again. Okay? So this is what I mean by that. So guys, this is what I want to tell you guys about what's going on into the cycles of stock market. And I said that so many years it will be good, 1 year will be bad, and sometimes if you stay you will lose a lot as an investor. So you should just have an idea about that. But there is no sure thing to know that next year is bad. But you can see it. When the market is collapsing, you can see it. And you can take actions before you lose too much. And this, what we use in trading, in buying stocks. So I will give you this information about trading stocks. This is the last information I give. And then I see if you have questions. If you don't have questions, I will end the session. So I will explain to you right now in trading what's going on. Okay? So in trading, why we use a stop loss? Because a lot of people they don't know. Okay, let's say you buy a stock today. Okay, here is you buy a stock today. Now you put a let's say no, let me see here. Let's make it very simple. Okay, so this is the day the stock was going up the whole day. At the end you buy. This is the buy line. Okay, the buy line. Okay, where you bought the stock. Let's say it's $20. Just give you an example. Okay, let's say it's now. Let's say one day it goes up. It is 21, but the third day it goes down. Now it's 19, and then it is 18. It is 18. Okay, it's now 18. Now, why we do? Let's say you stop loss here. Why we do the stop loss? Because we don't want that. For example, we have 5% we lost in this trade. This is the loss in this trade. We don't want to have 30% lost, because if you do only few trades losing 30%, you end up wiping your account. Your account will be zero at the end of the year, especially when you are doing penny stocks, which they go very, very quick down. You see that? This applies. Stop loss is like what I said for investing. If the year is bad, you can stop the loss and buy it again. Okay, you can stop here, but the stock, if it's going down, when it's going up, you buy it here again. That's it. Okay, you could do it even with the stock. It's the same technique. I use this technique a lot, and I showed in my subscription a lot. Stocks that I, as in general, I have sold a lot of stocks but after 1 month, after 2 months, after 6 months, after 1 year, I buy them again. Now you ask me, why do you buy them? Yes, because now they are better than last year. So it depends on where you want to buy the stock. So that's why I told you that these techniques that I am using, they are very, very simple techniques, but they are very, very effective in any market. If you go to trade in China or India, I have traded in India, in Australia, in England, in Brazil, all where you go, it's the same techniques because the chart is the same. Wherever stocks are going up and going down, it's the same thing. Okay? So guys, do you have a question for me for this cycles of stock market? If you have, please ask me these questions now. Now, if you don't know, if you don't have, so I will be obliged to end the session right now. And sorry for last week, because last week I have some important things, so that's why I miss the live. I hope I will not miss it in the future. Okay? So guys, do you have any question about cycles of stock market? I have made a video last time about Apple. Apple will be having a split. So guys, if you have understood the split or you have seen my videos, now for those who did not check my video, so I will just explain to you how does this split works, and then I will end the session because I see that you have no question. Okay, so let's see. Now, Apple on Friday, it says that it will have split 4-1. Okay, so the stock was $500 on Friday. Okay, so you will divide it by like this. Sorry. Divided by 4, so you will have what? You will have to divide, it will be like $124 on Monday. But you ask yourself, why Apple divide its share, one share here, one share on Friday, it was 500. Why they do the split? This is called split. Why they do that? It means they want to have the company more shares, but lower price, to make this lower price attractive to more investors. Now, when the people they like it, now at $500, most of the investors that have some money, they see it's too expensive. Apple is too expensive now. I can't buy it. I don't have money. Okay? $124. It means if you have $12,400, you can buy 100 shares. Okay? 100 shares, you can buy them on Monday. But what is 500? 500 you can own only 20 on Friday, 20 shares. Now 20 shares. Yes, and then now you own 80 shares. If you really own on Friday at 500, 20 shares, you will get 80 shares at 124. But in terms of trading, does it matter? In terms of trading, it doesn't matter at all. Because I will show you right now, I will show you how the chart will look like. Okay. I will show you the chart of Apple. Because I think the chart has already changed You see that? You see that it is 124? The same chart for last week. Because they divide, so you have the same chart. So I will make this clear. Okay? It's the same chart. Okay? The same chart. But here it's 124. So I will just show you the older chart and the new chart. Okay, so please watch what I am going to do. Okay, look now at the chart. I will explain. Two charts. Now, what's the difference between Friday and between next Monday? Now, in Friday, the stock was $500. Now it is 124. Is there a difference in the chart? No. The chart is the same. It's just the number that have changed. So they divide this 500 by 4. That's why we have $124 here. Okay? But let's say you, in your account, we have $10,000 in your account and you bought only Apple. Does it change on Monday? No, it doesn't. It doesn't change. You have 10,000. You have 10,000. Your money is the same. But here you have, for example, 20 shares of Apple. Here you have 80 because you multiply by 4. 80 shares of Apple. Okay? So that's it. So 20 in the past, now 80. But your money is the same. Now, what about the trading? Trading, what is it? Now, it is up to you. Do you want to stay in the trend at 124 when now it might go up, it might collapse. So this no one will tell you. So guys, if someone tells you that when there is a split, you will make money, he is the biggest liar in the world because no one knows. So I will just try to put this way. Okay, so here is $124 for each share. Now, let's say this is Monday. Now, what will happen in the Monday? Either the stock goes up from 124, it goes up, or it might collapse. It might even go down, a downtrend, or it might go into an uptrend and continue the trend. This is a trend up, and this is a downtrend. Okay? So that's it, guys. And hope you get advantage of this. Artkov, thank you very much, Artkov. Free traded cycles also come with sector rotation. Tesla also split. Yes, I didn't know about Tesla. That it will split. Now Apple is just someone who tells me, because this is a problem for me. I don't follow the news. I just I go to my chart. I find Apple with 124. I say, why it's 124? It was 500. And then I go to Google it. I find it is split. That's why I explain it. Thank you very much, Painflow. Thank you very much, NASA. You say Apple split will increase liquidity. Liquidity is about the trading. They like it. Apple, Facebook, these are stocks that traders they like too much. So, and free traders speaks about the cycles also come with sector rotation. Yes, this idea of sector rotation, I will speak about it because you mentioned it. Because you mentioned it, I will explain this because I forgot about it. I forgot. Now let's see. If you want to see rotation, let's go to energy sector. I will show you. I will show you energy sector how it is going down more and bad than the other markets, than the Dow Jones. See, I will show you. Now, energy sector. Okay, look at energy sector. Let me show you one which is correct. Yes, one is showing very, very good. Okay, now look at this independent oil and gas industry. Now, here is what did happen in February and March. This is coronavirus. This is this year. Okay. So I will show you. Now this year here is, yes, this is the beginning of this is 2020. Okay. Now let's see. What is this year here? This here is 2018, the end of 2018. 2018. Now, see this sector, this industry. It was at 1,091. 1,000. Beginning of this year, it goes to 836. It means 2,000. If we take this just as an example, I show you how the sector, how the industry rotation. At least you will understand industry rotation. So let's go from the chart and go to see the explanation. Okay, so now here is 2018 at the end in October. It is a high. Now if we make the high here, see 1090 or 100. What does it mean? You see that the market has been going bad since October 2018. Now if you compare this by Dow Jones, so Dow Jones was going up and then it collapsed and then it go up. You see that? So this is the Dow Jones. Dow Jones, it means the 30 stocks of the Dow Jones. It was going up, then it collapsed in February and March, and then it's going up. But if you see independent oil and gas, what did happen to them? They begin to go down. This is a big downtrend since October 2018. So it is like 2 years. 2 years going down. So this is, you should understand. That's why one of my students asked me this year that she wants to do oil sector. I say no. I say no to oil sector because I tell her it's going down since October 2018. Why you want to invest in stocks that are doing bad? Even when they go here, they go just little bit. Okay, so I will show you. I will show you again the chart, and I will compare it with Dow Jones. So if you go here and you do comparison and Dow Jones, okay, see Dow Jones. Dow Jones is doing better than this independent oil and gas industry. It goes down, but see where it is here. Okay, see where it is, the Dow Jones. See where is your, for example, if you want to invest in this industry, which is called independent oil and gas. Okay, here in 2018, the gas was $4.84. Now here it is $2. Okay, if you want to speak about in terms about money. Okay, if you want to speak about money, if you want to speak about gas, now gas here it was $4.85 per gallon of gas. Now how much gas now is $2? In general, it's $2. You see that? How can you are investing in oil and gas and they are going down? You are against the market. The market for this independent oil and gas are going down. So these 2 years or 3 years, you should not invest in independent oil and gas. If you do, you will be losing a lot of money and your investment will be bad. But if you have made a choice of Dow Jones stocks, you will be making more money than before they stop going down. Okay, so thank you very much for bringing this up. Yes, NASA said 2020 is the best year for those who knows how to trade. It's not only 2020, 2019 also was very, very good. Okay, so guys, thank you very much for watching. Please, if you have any other questions, so our trading account is 127%, okay, for this year, and it is excellent profits. So if you have any other questions, please ask. Thank you very much for watching, and see you next week.